Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, April 19th, 2016. Take a look at the markets today. This is not a significant rollover yet, but it is worth noting, and I want to make the case here that this could be more than just a simple float down on light volume over lunch before a late day surge to the upside. The reason why I'm saying it could be a little different is because of the levels we're at on the S&P and also the key level that was tagged yesterday on the SPY. And again, what I want to do first of all, note the intraday action. This is the intraday chart of the spiders. A gap up today. Oftentimes stocks or markets end on a gap up at a major high. So again, think about this. The S&P's up what, 15% in the last couple months. It gaps up today on seemingly negative news. That's important because you got bad news from Netflix. Take a look at Netflix. Let me bring that chart up here now. Netflix, bad earnings. Look at this stock getting hammered today, yet the market was still positive early in the day. Goldman Sachs, green, but early in the day was negative, now starting to fade. That had earnings this morning. IBM, take a look at IBM. Just off of the lows, down 6% or $9. So there's a lot, aside from the financials are doing okay, and oil stocks because oil's up, but everything else is really not performing well. Take a look at stocks like Amazon today, guys, down $11.50, getting crushed here. Take a look at Google, down $15. Take a look at Tesla, down $11. My point is, there's many names here that are getting punished, and the markets, again, gapped up, ignoring that at first, but reality does need to set in at some point, and this is a big drop on many of these big names. All right, and again, I just showed you Amazon and Google, two of the biggest names in tech. Tesla is one of the biggest names, well-known names out there, getting crushed here, down 4.5%. So there is some stuff going on here that's not being replicated in the S&P, or at least not early in the day here. But look at this. We're now turning negative. Key is going to be this 50 moving average. We got gap fill right here. If you can get below this 50 MA, this could be a significant reversal today. And what I want to do now is just go back to the daily chart, guys. The daily chart here, look at the move we've had lately. I mean, incredible. But what I want to show you more importantly is this trend line. I pointed this out yesterday as well. This is the one that I've been watching for a long time. I told members about it for quite some time. I've told really pretty much anyone out there that would listen about this level. So today I love this because if you connect all these highs going back to the high from last, I think that was May, the all-time high in the spiders, all these lines, right? Look at how the market yesterday ended right at it. Today we gapped above it. The market, I know you might say, well, we gapped above it. Shouldn't that be a breakout? No, that's the kind of the misconception here. Oftentimes what they'll do is they'll gap the markets up, because what it does is above a level, it gets everyone covering shorts. And then once the shorts cover, then you see the market start to give back and the reversal takes place. So that's why we use the confirmation signal, a key signal. Confirmation is what it's called. And basically what it does is it confirms a breakout or tells us that it's not a true breakout. And obviously in this case, there was no confirmation of a breakout, so you would still be factoring in the resistance trend line. And sure enough, look at this comeback here, down 5 cents. Listen, 5 cents is nothing to scream at. But again, I want to point out the negatives out there that you're seeing. This key level here on the S&P. Obviously, the S&P itself pierced 2,100. Now it's back below the 2,100. Yesterday, Dow pierced 18,000. While that gets the average kind of not so smart investor bullish, those of us that are more intelligent in terms of investing, we know that the markets generally want to pierce those levels before reversing. And what it does, again, is when you pierce the 2,100 on the S&P or an 18,000 on the Dow, the media pumps it like crazy, and then that gets all the little guys bullish and going long or short covering, and then that's when, once they're all long, then the big boys reverse it. So it'll be really interesting here, and the spiders are bouncing off that 50 MA beautifully on an intraday basis, getting a little bouncier. But watch this market, guys. And again, no guarantees. We know that from the way the market's acted lately. This has been a move up that's been astronomical and actually surprised me even by how far it's gone. But watch today where this market closes. I'm very curious to see. After the bell today, Intel, Yahoo earnings, a couple other VMware, stuff like that. But Intel's probably the big one. Yahoo's going to be interesting because of the buyout chatter on it. Supposedly Verizon was interested. We'll see if they tell us about any sort of bids for the company, the underlying company, the core assets there. But bottom line is, guys, look at this up move. Potential reversal. IWM is actually negative pretty nicely on the day here. Potential topping tail on IWM. The Qs are just getting hammered today. Look at the drop on the Qs today, guys. This is a big drop. Down over $1, 1% drop on the Qs. And that's all because of stocks like Amazon, Netflix, even Facebook's getting hit a little bit today, although not as much. Apple dropped a lot in the previous couple days, down another 75 cents today. But look at the drop on Apple recently, too, and the market wasn't reflecting that either. There was a major disconnect or divergence here. And again, what we want to see is, does this become a bigger event? All right, guys, bottom line is, we're here. Come join us at InTheMoneyStocks.com. Learn these techniques. This is how you predict things. This is how you understand the charts. Come join us. Take the 7-day free trial. Take